So, Avan, for me, I look at market, last week's price action was actually dominated more by, that's Friday's data. This is not last week markets only came back on, please change the heading, it is Friday's data. Last week, what did we see? We saw markets really giving you a move which was largely based on news from the globe, comments from Fed, geopolitical news from Middle East, and FI selling. So last week's price action was more like a two-way price action. It was dominated by global cues, and there was very little local influence per se. That is last week's price action for you. Then you go to map and see what happened on Friday. So what happened in the first 3 days? It was a holiday last week. What happened in the first half of the week versus what happened on Friday? I guess that needs to be looked slightly differently. After a steady fall on Friday, markets saw Majestic recovery. What that means for me is that markets have found support at lower levels. For the moment, geopolitical concerns, we've not heard anything from you. We've not heard anything from any big, global leaders. It appears that global concerns and geopolitical tensions have taken a backseat, and we saw bout of short covering. So for me, Friday's action is a clear example that markets are unlikely to fall in a hurry. There is support at lower level, but the price action will be two-way, and at upper level, at higher level, this market is unlikely to rally, given that you got FI selling and you got comments which have. So we are stuck in what could be called as a broad band with a lot of volatility, and this week really could be a function of local once again, not global.
But I think, the point is really after this volatile last week, what should be the strategy for the day? Given that there are more shorts in the system than longs, it's an acutely earnings heavy week with Reliance starting earnings this week itself, today post-market hours. A lot of news flow as well, both global as well as local.
So one thing is sure that this market has found support at lower levels, which means that when you get a bad day like what you saw on Friday, you want to be a buyer. I think the moving point from global standpoint this would be the US GDP data, because a lot would actually be hinging around what the US markets would do in terms of the global level, which will be connected with FI selling. So for me, that's a moving part. But you're right when you say that this week is dominated by local numbers. Markets today react to HDFC Bank numbers. Markets will react to Reliance numbers. Later this week, we've got HUL. So this week, in a sense, the dominant theme would be large cap numbers. If globally we don't get anything new on the geopolitical front, then I think the bout of short covering may well continue. So if you want to play for a bout of short covering, and then middle of the week you got to take it from there. But I would make a case that the downside in the market is protected, the upside in the market is clearly there, and within that you are likely to move depending really on the news flow. The problem for our market, I think, is not local, it is global, which is geopolitical tensions, Fed commentary, and FI selling. If FI selling, which was neutral on Friday, if that turns one day or so, then the bulls will have a fresh spring in the ride. So that's the broader strategy. You have to buy this market on a bad Friday. When you get another bad day like this, just be a buyer. And when you get a great day like what we saw, let's say, 10 days ago, when markets were up 1.5%, you be a seller. This market is not going to run up in a hurry, and this market is not going to crumble down with any worry.
Yeah, okay, that's going to be the strategy that you really need to adopt, given that it's pretty much days of volatility. And no, it is not a truncated week. We've had quite a few of those, but 5 straight trading days, and it's going to be busy, busy, busy. We've got the Lok Sabha elections. We'll be monitoring the US GDP print. We've also got the expiry for the month gone by. We also have 26.9% of the Nifty earnings that will be declared. Aisha flagged off Reliance. There's HUL, Axis Bank, IndusInd Bank, Bajaj Finance, Maruti, Tech Mahindra, and a whole lot others that will be coming up with their quarterly numbers this week itself. So a lot that'll keep us on our toes, Nikunj.
Yeah, the standout would be Reliance and then HDFC Bank numbers. And I think minus you got IndusInd Bank, which in a sense will give you a flavor of what is happening to the mid-tier or the semi-large caps, banks. I think Maruti numbers would also be important. So purely the variety of numbers which would be thrown at the market this week, I think will make market look very interesting. So apart from Reliance, there is nothing which could be called as a very big nifty moving number. But top of the draw would be Bajaj Finance. Are they maintaining their growth? Maruti, are they getting any sense that FY24, 2024 momentum will continue? Are margins coming back? I remember this line from Maruti that the butter from the bread is missing. Is butter really coming back from them? And then Shriram Finance, it just got too nifty, and that business I think is exceedingly doing very well. Where you need to spend some time this morning, I think would be HDFC Bank. Now, why HDFC Bank numbers are important? Well, they came out over the weekend. And unlike last quarter, this time, I think the messaging is very clear that in the near term, growth versus profitability, we will go for profitability. And that is a migration which I think is visible in HDFC Bank. So these numbers are not like, there's nothing great about these numbers, but there's nothing new in what the HDFC Bank management has already communicated, which is that we will hunker down growth so that we can work on profitability. And that may just cap the upside for the market, because for me, the real turn for HDFC Bank will only come when growth genuinely starts coming back, which could be a function of liquidity and how deposits are likely to move. So we saw a scary aftermath in HDFC Bank post last numbers. But I guess markets were prepared that growth is unlikely to make a comeback. They've officially just communicated that. So this time around, expectations were low. Numbers are exactly in line with what they anticipated and expected. That means that since there is no negative surprise, there is no positive surprise, the bank is unlikely to rally. For me, the real turn for HDFC Bank will come when liquidity comes down and where growth comes back. I think if the management is saying that we don't want to grow, we want to focus on profitability, that means from a market standpoint, the stock may just hang in there. It has suddenly stopped falling and it may just hang in there. But I don't think it's going to be like the bellwether stock or it's going to be the engine stock market per se. So 15% of the Nifty now gets completely jammed.